Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm the senior trader at the Forex Super Model, and this is the Technical Issues series, part 1, How Volatile is my FX pair? Now, let's have a look at what we're talking about here then. So, what we've done is we've modelled the FX pairs that we use in the complexes, and we use 8 complexes. So we use 8 complexes, and they are the dollar, the USD, the euro, the yen, the pound, and they're the 4 that we use in the daily briefing. They are like the core of the modelling, and then we bolt on the CAD, the AUD, the NZD, New Zealand dollar, and the chuff, Swiss franc. Now, if you're not sure what a complex is, go to the one of the educational videos we've got on the channel, which what are FX complexes and how do you calculate them. But basically, a complex, the daily briefing complexes, which is the dollar, euro, yen, pound, are made up of all the pairs in those particular things, whereas a full complex is made up of the 8 currencies that you've got along there. So for example, the dollar complex would be the euro dollar, then it would be the dollar yen, the pound dollar. So they're the core ones, if you like. Then you've got the dollar CAD, which is the first bolt on. So you've got the dollar CAD, the AUD dollar, the NZD dollar, New Zealand dollar, and the dollar Swiss franc. Now, if you notice, there are seven pairs in a full complex. So 8 complex is 7 FX pairs in a full complex. So obviously, if the dollar complex is made up of the pairs that always have the dollar in it of the rest, and the euro complex likewise would be euro with the other complexes. So you've always got 7 pairs in each complex if you're looking at full complexes, and basically because of the duplication, for example, the euro dollar will appear in the euro complex as well as the dollar complex. It's just the other side of the pair. Then these 7 pairs in the 8 complexes will distill down to 28 pairs, 28 FX pairs. So we've got 8 complexes comprising of 7 FX pairs each, and overall this will distill down to 28 FX pairs, and then you've got the lot, as it were. So what we're going to do in a minute is rank those FX pairs, but before we do that, we're going to look at the overall picture in terms of complexes. So let's just get rid of this. So remember, these are modelled from the Forex Super Model complexes. And if we look, let's just switch this over. If we look at the 8 complexes, then we can rank them in terms of modelled volatility as follows. So we've got the dollar, the Swiss franc, the yen, the CAD, the AUD, the EUR, the NZD, and the pound last. So now, if we use as a base the complex which has the least volatility in terms of our models, then it is actually the dollar. So we base this at 100. So we say that the dollar is our base at 100, and so any complex beyond the dollar, so going down, will be more volatile than the previous one. So the Swiss franc we rate as 109. The yen at 124. The CAD at 129. The AUD at 130. The EUR at 134. The NZD at 144. And finally the pound at 179. Right, so a quick chat about that before we move on. So as I said, the dollar is a base, has base volatility of 100, and then they get more volatile as we go down the list. So if you look at the most volatile, which is the pound complex at 179, which we can call and the dollar. So this is the pound, and the dollar is 100. So you got 1.7. The pound complex is 1.79 times more volatile in modelled terms than the dollar. So that gives you an idea. So roughly in even numbers, the least volatile to the most volatile is a ratio of roughly 2 to 1. So the pound is roughly 2 times more volatile than the dollar complex. Right, so that's where we are there, and we're going to have a look at now the relative volatility or model volatilities of the 28 FX pairs. Right, well, I've written these out to save time. These are the 28 FX modelled pair volatilities, and again we've based the one which is the least volatile at 100, and we'll quickly run through these in case you can't read the writing or anything. But the least volatile in our base is the euro pound at 100. Number 2 is the New Zealand dollar at 135. Number 3 is the euro Swiss franc at 137. Number 4 is the Swiss franc yen at 140. Number 5 is the Australian dollar New Zealand dollar at 145. Number 6 is the Australian dollar CAD at 148. And number 7 is the dollar yen at 150. Now we'll just break this up. So basically, why is it important to know the model volatilities of your individual complex and your FX pair? Well, obviously it affects how how much it's going to eat into your account when it's going with you or against you. So it's quite important. And are you trading basically a fast mover or a medium or slow mover? And it's very important, and that's where we're at. So let's carry on then. So 8 is the Australian dollar USD 155. 9 dollar Swiss franc USD dollar Swiss franc 157. 10 USD CAD 165. 11 CAD Swiss franc 170. 12 is the AUD Swiss franc at 172. 13 is the New Zealand dollar yen 175. 14 is the euro dollar at 190. Now, break this up again, so we're halfway. So if you take the least volatile model pair, which is the euro pound, and over here we've got the most volatile, which is the pound AUD at 405, then you've got 100 plays 405, which is roughly so 405 divided by 100, it's basically 4 to 1. So the least volatile pair, the euro pound, is relative to the most volatile pair in our models, which is the pound Australian dollar, has a 4 to 1 ratio. And if you remember, the complexes have a 1.8, roughly 2 to 1 ratio. So you're looking at 2 to 1 ish on the complexes between the most and the least, and 4 to 1 on the individual FX pairs. So let's just carry on a minute. So 15 is the CAD yen at 195. 16 is the Australian dollar yen 210. 17 is the euro CAD at 225. 18 is the New Zealand dollar Swiss franc at 237. 19 is the pound dollar at 240. 20 is the euro yen at 250. And 21 is the New Zealand dollar CAD at 259. So just one lot to go then. Right, so basically you've got this like 2 to 1 in the complex ratios from the least to the highest, and 4 to 1 in the individual FX pairs. So it gives you an idea of what to expect when you're trading, and also gives you an idea of what you can look at how they're moving. And remember, these aren't in terms of points, so that 100 is not 100 points, and the 140 for the Swiss franc yen is not 140 points. It's the volatility relative to the base or the least. So if you want to work out individual volatility ratios, you can. So for example, if you wanted to argue whether, look at the AUD CAD at 148 and the euro CAD at 225, then you'd have 150 over 148, 225 over 148 would give you that ratio of how much the euro CAD was going to outpace, if you like, the Australian dollar CAD. So you can take any of these in relative terms. So let's just finish off anyway. So 22 is the pound Swiss franc at 280. 23 is the euro Australian dollar at 310. 24 is the pound yen at 355. 25 is the pound CAD at 372. 26 is the euro New Zealand dollar at 375. 27 is the pound New Zealand dollar at 384. And 28 is the pound Australian dollar at 405. And that's the big one. Okay, that's the biggest we've got. So looking at our complex volatilities, remember that the dollar was the least and the pound was the most. So, and the New Zealand dollar was the next most volatile. So it's reasonable to assume that New Zealand dollar pound pair will be quite a goer towards the structure that we're in. So you've got the New Zealand pound is number 27 in terms of 384. Now you can argue the toss about whether these are correct or not, but we have developed these volatilities for our models, and they work in our context. Now it doesn't mean, for example, that you couldn't get the euro pound, which is in principle the least volatile pair, moving more than, say, ultimately the pound Australian dollar. You could do it. Depends on circumstances. What all we're saying really is that these are the modelled volatilities and movements of each of the 28 pairs, and if you link that with the modelled complex volatilities, then you're in a good position to understand how fast things are moving relative to each other, and what to expect when you're sticking trades on. And if you have a small account and you are faced with a decision as to whether to trade something, you know, Euro New Zealand, for example, or the Australian dollar New Zealand, then you're in a much better position to say, well, I'm a little bit going to be tight on margin, it's not going to give me much swing, so I'd be better off trading the Australian New Zealand in this case than, say, the pound New Zealand or the euro New Zealand, because they're gonna really move a lot more. They could move, you know, 2.5, 3 times more. So my account is going to be swinging around far more. So that's useful information, and obviously there's a lot that can be gleaned from all this. Now, I hope that's been useful. This is part 1 of the technical series. How volatile is my FX pair? Now hopefully that you can see that even if you don't agree with the exact hierarchy or the structure, you can see that there's some logic in that, and if you could create your own if you wanted to. But this is what we have found works for us, and this is based on sound modelling criteria. So thank you very much.